G'day folks, welcome back to another update for the S&P 500 and the NASDAQ, both reaching record highs. Before we go further, make sure you hit that like and subscribe button to support the channel. In terms of the analysis, valuation concerns, the emergence of China's AI startup DeepSeek has led to significant declines in major tech stocks, with Nvidia's shares dropping 17%. We did a video on Nvidia recently, raising concerns about high valuations in the tech sector. Market concentration. The recent tech stock tumble highlights the risks associated with the market's heavy reliance on mega cap companies, prompting investors to reconsider their portfolio positioning. Political influence. Investor optimism surrounding the return of Donald Trump to the White House has contributed to significant gains in the stock market, with the S&P 500 reaching its first record close of 2025. Earnings performance. Overall corporate profits remain strong, with a high percentage of S&P 500 companies exceeding earnings estimates, driven by robust performances in sectors like technology and consumer discretionary. Economic indicators. Strong US GDP growth is expected to support continued earnings per share growth, despite concerns over market breadth due to the dominance of mega cap tech stocks. So starting with the S&P 500, as always, we'll look at the long-term trends with the monthly, the weekly and the daily. So on the monthly, you can see there the CCI 150 is above its moving average, although it's coming back, retracing back towards that moving average range. Although the price is well above its respective moving averages. And by the way, these indicators are available in a description below in the video to reference that at a later stage after this video. And you'll notice as well, it's pulling back on the CCI, as I said, although it's still bullish. But notice we've got a bearish divergence on the monthly, a very long-term one starting in 2022 versus higher highs on the price. Now, that's still in play, and we're going to expect to see a retrace. We did have a bearish divergence back here. You can see there it pulled back, and what we do is we measure going back to the previous lows. Now, again, long-term bearish on the monthly. On the weekly as well, we've got another bearish divergence. We've got a double top there almost. That's also pulled back in those respective rectangles drawn, and that's all on the 23-38% Fibonacci retrace. So we take it back to, just a look example on the weekly. We'll take a Fibonacci from that high and we go back to the previous low before that divergence started to the previous low, and that's the 23-38% level minimum retrace. You can see there it broke into that range very nicely and bounced out of there perfectly. That more than 90% of the time it hits that minimum range. We've got another bearish divergence here, and what we do is we draw another Fibonacci from that high back to that low, and that's at 23-38%. Now it's already hit that minimum retrace, but notice the CCI is still dropping, so we might possibly see further declines. And today, this week, we've had a bearish candle so far, so just be aware of that. And if we go to the daily, again, we had another bearish divergence here. This one pulled back, hit our minimum retrace, went a bit lower, bounced, hit a new high at 61.28, and it currently looks like it's actually gravitating back towards this descending trend line. So we draw these and see how it goes, but we may see further declines. At the moment on the daily, it's neutral on the CCI. You can see it's right in the middle of that moving average range, although the price is above its respective moving average. But we may possibly see a decline back to this area, or it could actually break higher towards that resistance. So again, wait to see what this CCI does, and that'll dictate to some degree what the price does as well. Now, if we go to the intraday chart, if you're trading on the 1, 2, 3 or 4 hour time frame, whatever, I wouldn't be taking any trades at the moment until we see a more decisive direction on the CCI. If it breaks higher, we take long trades. If it breaks lower, we take short trades. And the way you operate that is when you see the daily, for example, going long, you take long trades on the intraday. In this case, we've got the 1 hour. So back here when it was bullish during that little period on the daily, you go long when the CCI breaks above the moving average, and so does the price. So if we drew a ruler, you would have taken a long entry on that candle there, and you close it out when the CCI breaks into that moving average range, and that'll be, let me just zoom in a bit, and that'll be on that candle there. Close it at the close of that hour. So we've gained, that's 0.72% gain in 12 hours of trade. Avoid going short because the daily is going long. Take another long entry there. That would have been a false break, and you put in a stop loss somewhere in that moving average range, so you would have stopped out at that one. Another long entry on that one, and you would have gone along the close of that candle. You could have possibly closed it there when it broke at that low there, but notice it still gave you 0.09% gain in 5 hours of trade. Go long again when it broke above that point there, And let's see what it did here this time. And we closed it out when the CCI breaks into that moving average range there. So you would have closed it out there. That gave you a 0.45% gain in 14 hours of trade. And then lastly, more recently, you would have gone long again at that point when it broke above. I've color coded the CCI down here just so you can see it more clearly. Going long there, and you would have closed it out when it broke down there. So you would have closed it out at the close of that candle. 0.16% gain in 11 hours of trade. Now since then, he had another trade here, went short. You wouldn't have gone short there, just to hold off. You're still going long, don't forget. And going long there again on that candle, and close it out when it enters into that close of that candle there at the high there. That was a 0.41% gain in 10 hours of trade. So you get the idea. And since then, you wouldn't have gone long. At the moment, the daily is in a neutral positioning. Avoid going short because this could have bounced at any time. You can see there the CCI has actually bounced higher. So just be careful about getting too carried away with trading on these time frames in isolation. And again, you wouldn't be trading long or short until you started seeing a bullish move or a bearish move on the daily. One thing I didn't mention as well, always look out for any divergence. And even though you might have been going long on some of these areas, notice here we've got a slightly lower highs on the CCI versus higher highs in the price. So even if it's a double top like it was back there versus higher highs in the price, that was a first sign of a potential reversal or a retrace. Now that didn't happen. You've got to keep following the CCI and watch the price. And as soon as you start seeing a pullback well below the moving averages, that's where you would have seen a retrace happening as a reason or as a purpose because of that bearish divergence we saw on the CCI. So again, I don't trade the divergence. I just use them as a potential avoidance of trading, potentially. If I start seeing a bearish divergence, if I'm going long, or on the alternative, you're seeing a bullish divergence and going short, probably a sign to avoid trading possibly. So here we've got the NASDAQ. Now on the monthly here, we've got lower highs on the CCI, a very long-term bearish divergence versus the price. Now the price is still making new highs, of course. Again, I don't trade these. I'm just looking at a potential for a reversal at some point. Now at the moment, it looks still like it's making new highs. We look at the lower time frames to determine if and when it may pull back. So another bearish divergence on the weekly. Again, these are independent from the different time frames. So the weekly is independent from the monthly divergence. So again, bearish divergence on the weekly versus the price, on the CCI versus the price. Now this one actually pulled back because if you were to draw a Fibonacci between that high and that low, you'd hit that 38% level, and it's actually bounced out of there. So potentially it may have already completed the divergence, although notice the CCI is still dropping. So I'd suggest it's probably got more downside to go. The daily, it has actually hit this resistance up here at 22,135. It looks like it's come close to it again. Again, it's actually gravitating towards this diagonal descending trend line. Again, this has been another 38% Fibonacci retrace on the daily between that high and that low. It's a bit off skew. Let me just redraw that. That'll probably go down to that level. Yep, so 38%, it's actually touched that and it's bounced up higher. But again, it's showing it's a bearish movement on the CCI, although it's bounced, the CCI itself is bounced towards that moving average range. So you could possibly see a further upside or a downside. It's hard to tell at the moment. You just got to watch it and monitor it. And if we go to the intraday chart, again, bearish at the moment, although notice the CCI on the hourly is moving to the upside. There was a little bearish trade here you could have taken. Let me see if that would have paid off. So you would have entered it when it closed below there on that candle, and you would have closed it on the close of that candle. So that was a just 0.05% gain in 6 hours of trade. So very minimal, but again, just the way you trade it. At the moment, it's breaking higher on the hourly, so just be cautious. I wouldn't be going long until you see the daily break higher than that moving average band at least. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.